Good noon and very early good morning to our colleagues in different parts of the world. Many thanks to KSI, the Strategic Institute for Asia Pacific, especially to Tan Sri Michael Leo, and of course the Economic Club of Kuala Lumpur, particularly to Datu Sri Iqbal for this opportunity to serve as moderator in session 2. To our participants, welcome to session 2 with focus on Southeast Asian market and investment opportunities in the new normal. We all know that for many businesses across the globe, 2020 was the year of extraordinary challenges. Across Southeast Asia, financial institutions faced challenges such as the squeezing margins, increasing cost, heightening asset risk, and reducing demand in some sectors. But the pandemic also reshaped human behavior and changed how financial institutions operate, laying the foundations for a new type of financial services provider to rise from the ashes of COVID-19 pandemic in 2021 and beyond. To give us a very clear picture on the Southeast Asian market and the investment potentials in the new normal, we are privileged to have on board Dr. Tan Chong Koay, Mr. Shazali Sulaiman, Mr. Shan Saeed, and Mr. Firdaos Rosli as our distinguished speakers. I felt the need also to introduce them in details to put this in the context of our discussion right now on markets and investments. So our first speaker is Dr. Tan Chong Koay, who is the founder of the Pheim Asset Management Sendirian Berhad, Malaysia, and of the Pheim Asset Management Asia Private Limited Company in Singapore. Dr. Tan is the man of awards. He was named as Southeast Asia Small Cap King by Bloomberg in 2006 and was awarded as the Best of the Best Award CEO of the Year for Malaysia by Asia Asset Management both in 2008 and 2010, the Warren Buffett of Asia by World Wealth Creation Conference in 2017, and as National Outstanding Entrepreneurs Lifetime Achievement Award by the KSI Institute for Asia Pacific in 2021, among the many awards he received through the years. Dr. Tan is recognized within the fund management industry for his wealth of experience and his consistent, long, and excellence performance track record. Among his best records is the Pheim Sikab SIF ASEAN Emerging Companies in 1995 that topped all the equity ASEAN of Leaper Global Classification, which note the fund return of more than almost 500% compared to the second next in position. Moreover, his Dana Macmore Pheim in 2002 won the Refinitiv Leaper Fund Awards in 2020 for Best Fund among Malaysia's Islamic funds. On top of this, Dr. Tan is also the author of his best-selling book, Rising Above Financial Storms, published in late 2015. I'll proceed to the next to the introduction of our next speaker. Our next speaker is Mr. Shazali Sulaiman, who is the founder and partner of Shazali and Partners. He was the resident partner of the KPMG Brunei Darussalam for 20 years before his retirement in 2019. He qualified as chartered accountant in United Kingdom in 1987 and has extensive experience in banking and finance and energy sector. So Mr. Shazali is the chairman currently of the Brunei Darussalam International Chambers of Commerce and Industry and chairman of Brunei Darussalam National Council on Accounting and Management. And he is also a council member of Brunei Darussalam Institute of Certified Public Accountants, ASEAN Accountants, and is also an adjunct professor at the School of Business and Economics, University Brunei Darussalam. And he was also appointed as Honorary Consul of the Republic of Kazakhstan in Brunei in 2017. Our third speaker is Mr. Shan Saeed, who is based in Kuala Lumpur and is a chief economist at Juwai-IQI, the leading property, technology, and investment company operating and advising clients in Southeast Asian countries, London, Australia, Canada, and UAE, among others. He has 20 years of solid financial market experience in private banking, risk compliance management, commodity investments, global economy brand, and business strategy. Mr. Saeed is a financial market commentator also and cited in various media outfits within and outside the country. He has been invited at the World Bank IMF meeting in 2017 to participate in Belt and Road Initiative Summit and shared his thoughts about the importance of infrastructures in investment strategy for emerging economies. He earned his degree from the Booth School of Business at the University of Chicago and his MBA from IBA Pakistan. He is also trained in alternative banking strategies from Harvard Business School. Our fourth speaker is no other than Mr. Firdaos Rosli, who is the head of the economic research of MARC. He is responsible for economic, sovereign, sub-sovereign rating, and fixed income macroeconomic research. From 2005 to 2010, Mr. Firdaos was the Assistant Director of the Ministry of International Trade and Industry, and also the Senior Private Secretary at the Ministry Deputy Ministers from 2008 to 2010. He also served as with the Institute of Strategic and International Studies, Malaysia, from 2011 to 2020, and also a short-term external consultant to World Bank as former EXCO members of Malaysia-Japan Economic Association. Mr. Firdaos earned his Master of Public Policy from London School of Economics and Political Science, and his Bachelor of Arts in Accounting and Finance from Lancaster University and Business Foundation Program from St. Andrews College in Cambridge, United Kingdom. I hope I did justice to that introduction. And here you go, ladies and gentlemen. We have four speakers who are now ready to give their thoughts about Southeast Asian market and investment opportunities during the new normal. But before that, let me remind you to post your questions in the Q&A box only for your important questions to our speakers. So to start with, gentlemen, please tell us briefly about your company and the way you manage risk during the pandemic. So we can start with Dr. Tan, please.
Okay, thank you very much. Good morning to everybody, including fellow panelists. I think pandemic is something that is very interesting. It disrupts our life, and it's the first time we need to actually take care of other people in addition to yourself. You need to wear face mask, and you make sure that you don't transmit to other people. But anyway, what I'm trying to make a few points is that while this thing comes in, by coincidence, 2019 was a very good market. And then 2020 at the beginning also has a very strong market. As a result, the market corrected. Now, when the market corrected, it comes also together with the pandemic. And then somehow many people would like to push the ESG, especially tackling the climate change. So this has made 2020 a very difficult time for some, especially those involved in tourism, beverage, hotel, and hospitality. However, there are also other industries which benefit quite a lot out of it. For example, those that produce rubber gloves, and rubber glove, you know, the share has gone so high that, in fact, while many people think Tesla share has performed very well, in fact, during that few months, the rubber glove share has even performed better than Tesla. In fact, most of them has done well. Okay, that's a first point. Yeah, one thing good is that I noticed that businesses must try. As a result, we were saying that there are a lot of people who get affected very badly, especially those involved in certain industry, but there are also others who has done well. And some of them who are able to adjust very quickly start producing face masks, start producing some of the infections product has actually done very well. Particularly also, if you take a look at it, the tech stock also has done very well. So certain industry. So if you compare 2020 with a global financial crisis, of course, global financial crisis take 1 year and 5 months to correct the market. And it's also affected quite badly, but they don't, at that time, there's no pandemic, there's no COVID, So this time with COVID around, of course, it looks quite difficult time. And in fact, not at a good timing. The market from February the 12th to March 23rd, that was only 5.5 weeks. The market collapsed 38.4%, which is a very significant drop, especially when it comes from a big base. That 5.5 week Dow Jones dropped 11,000 points. Yeah, for your information, during the global financial crisis, it took 1 year and 5 months for the market to drop 54%. And during that time, it was only 7,600 points. So just to mention that, okay, 2020 is a very difficult year, but it also benefits some. The good news is this. The good news is that every government is willing to stimulate. And as a result, you see that during this period, the market, although corrected, sometimes, in the third quarter particularly, in the second quarter of 2020, the market has recovered quite well. So it is one bright spot actually. The stock market has done reasonably well, especially towards the end of last year and then the beginning and up to now, even Dow Jones has done very well, which is something that you also need to be careful. Yeah, what I'm trying to say is that businesses must adapt to the changes of the demand and supply, although there are certain industry that is just not possible to adjust, that's a point I wanted to make. By pushing climate change during this time, you can also say it's not too bad because then they can stimulate and help out and do more, Yeah. So my statement is that crisis actually created problems, but also provide opportunity. But you must learn how to handle this so-called crisis or this volatility. Yeah. ASEAN, in short, ASEAN is very interesting the way I look at it. ASEAN is very rich in resources. ASEAN also has a big population. ASEAN also has has a very high percentage of young population compared with other countries. And the growth rate is also among the better one, at least average about 5%, So that's something that I want to make the statement. The thing that you need to be very cautious is that US has done very, very well. So while you were doing that, while there were many industry in ASEAN which can really give you some prospect to participate in. I will mention some of the industry which I think ASEAN is very good for growing.
Yeah. Dr. Tan, maybe I can ask you later on about that. But it really strikes to me your idea of ASEAN as supposedly should be ready for possible public health crisis in terms of its economic sectors. And of course, we have to look at on the pandemic both as an opportunity at the same time as a problem. So thank you. Maybe some of your points, Dr. Tan, we can discuss that later.
Thank you.
Yes. May I invite now Mr. Shazali?
Good. Yeah. Actually, it's good morning. I'm sorry. I'm London time now.
Yeah, so
So
very good
I'm
morning.
sipping my coffee. I'm trying to keep awake. Anyway, thank you for the invitation to be a panelist again. I think I spoke about a week or so ago in the KSI summit. So it's an honor and pleasure to be able to speak at the ASEAN Leadership and Partnership Forum today. Now, I come from a very small country, Brunei, Darussalam. And when the pandemic actually broke out last year in around March, April, by May in 2020, Brunei had no local cases. So we were free of COVID from May till about 2 months ago. So we had about 16 months of no COVID. So it was business as normal in Brunei. So, there's no lockdown, there's no curfew and everything else. Unfortunately, sometimes when you get too complacent, you tend to lose your guard a little bit. And although we controlled the border, we controlled flights coming in and out. 2 months ago, there was a sudden outbreak of isolated cases. From two clusters. It suddenly grew in this last 2 months to about 7,000 cases in Brunei, which is a significant amount for a small country of 450,000. And as of Monday, the government has announced the curfew in Brunei. And because of the curfew and because of the partial lockdown, this has had a detrimental impact on the businesses in Brunei, obviously. So when the region was suffering for the last 16 months, Brunei was still okay. Now we are where ASEAN was a year and a half ago. So we have not learned from the mistakes of the other country. And the mere fact that Brunei is small, a lot of businesses in Brunei are dependent on the local market. We have 65% of our MSMEs being micro industries. And these are the industries that have been badly affected. And in order to mitigate some of the risks, and from a business perspective, if your income is decreasing, you need to control costs. And what the government has done is a number of things. They have provided, like in the UK, they have follow-up where they have subsidized some of the salaries. The Brunei government has subsidized some of the salaries, 25% of the local salaries for companies and business that's directly impacted by COVID. For example, the tourism industry, travel, restaurants, and so on and so forth. The government has requested the banks to give a 6-month moratorium on the payment of principal payment. And also for government properties and for properties, there has been a push from His Majesty for landlords to reduce rental by 30%. So what has been done actually is to try and reduce costs where income is coming down, so that you don't actually make your employees redundant. But obviously, nobody underestimated the impact of COVID. You talk about the American and China trade war. That is nothing compared to the global pandemic that we are faced with. Is global. 200 countries are impacted. It is something you cannot see. That's the problem. And I remember last year, in April, May, we were talking about a 6-month period where the pandemic will actually, will be history. We'll be able to live without this pandemic, especially with MERS and SARS in the past. We managed to cope with that. But we're coming to the end of 2021, and we are no closer to solving the pandemic. And I think what's happened is in the ASEAN region, a lot of countries are now trying to revitalize and revive their domestic economy, the domestic businesses, entrepreneurs. So entrepreneurs will need to re-educate themselves, re-strategize their business in terms of how can they survive in the domestic economy before going into expanding into the ASEAN market. So obviously, Brunei being a small country, we don't look at a business population of 450,000. We look at ASEAN being a 600 million market. But I think for us, ASEAN is too big a fish for us to look into. So we look at a regional, for example, BIMPIAGA, the Brunei, Indonesia, Malaysia, Philippines, East ASEAN growth area, BIMPIAGA. So that is more realistic for Brunei to slowly, expand its businesses out of Brunei for the local businesses. And I think the only way for us to survive, being in the UK, I see that COVID is part and parcel of their daily life. I'm free to go here and there. I've been to football matches, I've been to the theaters, to cinemas, without having to wear a mask. And I think once the ASEAN countries, we have more than 80% population being fully vaccinated, I think we can start opening the economy, and tourism is a critical aspect of the ASEAN economy. And once we are fully vaccinated and COVID becomes part and parcel of our daily life, I think we'll just travel as normal, just maintain social distance, our hygiene, wear masks in crowded areas. And you just think of COVID as being a normal flu, nothing more than that. Because if we keep doing the lockdown and curfew, we will never get out of this spider web, I think. So I think that I reached a stage where if all the ASEAN countries can get the population fully vaccinated, then I think we can start opening up, having green lanes, and tourism, certainly a critical invisible income for a lot of countries, will start to thrive. And I think that will be the catalyst for growth when tourism and people are free to travel here and there starts to become more relaxed. Thank you.
Okay. Thank you very much, Mr. Shazali, because we believe that a big percentage of the economy is more or less controlled or covered by the micro, small, medium enterprises, and they are affected, in fact, by the pandemic, and they need actually the support of both from the private and public sectors. So thank you for that. Let's proceed to Mr. Shan Saeed.
Thank you very much, sir. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum and good afternoon to everyone. Thank you to Tansari Michael Yo, Jessica and Kamla for having me in this important forum of ASEAN leadership and partnership. I'll start off by saying that since November last year, we have been sharing with our valued investors that global economy is heading for stagflation and advanced economies would be struggling. If you can bring my slide.
Let me help you on that.
Yeah. I have only 2 slides and I have the third.
Yeah, we'll check if it is okay. Not sure if it is working.
No problem, I can start. So we shared with our valued investors that, yes, thank you very much, that stagflation is going to hit the global economy and the cost would be rising because oil prices would be rising going forward. So we have been spot on in terms of stagflation, in terms of oil prices. And in Malaysia, at the start of the year, we said that Malaysia's GDP will be meandering around 3 to 4%. And on 14th August, if you can move to the next slide, please. And on 14th August this year, Bank Negara is sharing the same, the Governor Bank Negara. So I think we and Bank Negara, we're on the same page in terms of economic outlook for Malaysia. In terms of company, how we have managed risk, I think we, as a company, we have a contingency plan for every year. We saw this coming. So we were long on cash and we quickly managed to switch to technology. Most of our agents, they do social marketing. And in these tempestuous times, it is very important to stay in the market. You can't retreat the market. And the best way to capture the mind share is to capture the mind share of the clients. Once you capture the mind share of the clients, you build your market share. So we did the same. We were long on cash. And the most important thing in these turbulent times, we continue to upgrade, educate the skill set of our employees. So not a single day has passed where our employees were not getting education. The other thing that we have maintained at Juwai-IQI, since we have office in Philippines as well, and in 21 countries, including Malaysia, Dubai, Australia, Canada, Turkey, Portugal, that we have an engagement strategy. And what is an engagement strategy? That we publish newsletter and we send this newsletter to all our customers in 21 countries. So we are talking about over 100,000 customers. So this engagement strategy is very important because in these uncertain times, in these fragile times where you don't know what is going to happen in the next quarter, clients need someone to hold their hands. And the best way to hold your hand is to have a continuous engagement, continuous communication. And we have been saying at the start of the year, since last year, that global economy is going for fractured growth. And this month's newsletter, we have said that global economy will not recover before 2024. So for the next 2 years, we're expecting fractured growth with financial fragilities and bazooka. And we continue to see markets to stay volatile. And the only way to move ahead of the market, to move very aggressively, have engagement, stay long on cash. This is the only way you're going to mitigate your risk. And you have to be agile. You have to be very fast. And later I will share about investment opportunities. Thank you.
Thank you very much, Mr. Shan Saeed, for that enriching presentation about your company. And before we proceed to our fourth speaker, I'd like to remind the audience that you can now post your questions and some comments also in our Q&A board. So may I now invite Mr. Firdaos Rosli to share your thoughts about your company and, of course, of the market and investment opportunities in Southeast Asia. Go ahead, Mr. Firdaos.
Right, thank you, Prof. Very good morning to all of you. First of all, I would like to express my sincere gratitude to KSI, Tan Sri Michael Yos and team for organizing this event. This is certainly a very crucial point for ASEAN to start talking about trade and investment opportunities amid the rapidly increasingly economic reopening in the Southeast Asia. But let me start off by giving a brief introduction about the company that I represent. MARC is a domestic credit rating agency established just a year prior to the Asian financial crisis in 1996. So we have a rating universe consists of infrastructure and project finance, encompasses a variety of domestic projects and infrastructure assets, namely toll roads, power plants, water assets, oil and gas, building materials, real estate, commodities, and retail segments. So apart from corporate bonds, the rating team, I'm leading a team that rate sovereigns, sub-sovereigns, as well as we do fixed income analysis as well. So the sovereigns that we rate are not as extensive as the big three, but we only cover Singapore, Kuwait, South Korea, China, as well as with Malaysia. For sub-sovereign, we usually only cover Malaysia since we are a domestic rating credit rating agency. But we used to rate other ASEAN countries sovereign, such as Indonesia. In terms of achievements, MARC is honored to receive the Hong Kong-based the Asset AAA Infrastructure Award 2021. And this is the fourth time that MARC has been honored and humbled by the award, which we received back in 2020, last year, 2016, as well as in 2015. So let me move on to the risk, as in how we've been dealing with COVID over the last, 550 days or so. So as far as our bottom line is concerned, we are okay because we are so far managing the situation well amid the pandemic. Our strength is largely due to a couple of things. Number one is that we are living in a low interest rate environment where the OPR, the Malaysian overnight policy rate, is currently trending at a historic low at 1.75%. So there's a greater push right now for refinancing, and companies, corporations are taking advantage of this low interest rate environment. That's number one. Number two is that there is a greater push right now as well for greater digitalization, sustainability theme investments that is somewhat new in Malaysia, but not really globally. I think it was late last year. I think we rated one of Malaysia's established cancer council. So that was one of the few non-corporate entity-based ratings that we did. Thirdly, because of our proactive and functional leadership since 2019 as well. So we had a new leadership, a new CEO since 2019, And that has somewhat give us a different perspective altogether as to how the corporate landscape should look like. And a lot of restructuring has been going on ever since he takes leadership. That's the first part about the bottom line. Second part is about living with COVID. I think it's pretty much similar to everyone else in Malaysia. So, but what we do differently, I think, is that we often lead to believe that there should be only one entrance so that you can monitor who comes in and out, and movement of staff and people around the facilities. But as for Mark, we doing it rather differently. We expand our mobility channels as many as possible. So initially we have only one entrance, but we are putting 2 different entrances now, so that we are limiting interaction between one another, and and somewhat creating a bottleneck as far as human interaction is concerned. Everyone here is fully vaccinated, so everyone has started coming back to the office since last week, I think. Yep, since Monday last week. Everything is pretty much going as normal, apart from mask wearing, which is very much compulsory indoors, apart from you being in your workstation. But everything else, mask wearing is necessary. That's pretty much it. When it comes to having lunch together as a team, etc. So we try to limit that. We usually have some kind of a team meeting, etc. But we try to move it online. But even if we can't, we usually use the boardroom so that we can have a proper social distancing and all that, with the doors open so that we have a proper ventilation, etc. Let's move on to other topics.
Yes, thank
Thanks.
you for that, Mr. Firdaus. I have the impression that all the companies you're discussing right now managed to, it's not really survive, but definitely to overcome all the challenges of the pandemic. And I have that impression also that there are already strategies employed long before the advent of COVID-19 in Southeast Asia. But let me actually divert to some extent the question from the prepared questions in this particular session, because I'd like to see, perhaps I'd like to know your thoughts regarding maybe from the lens of the layman, of ordinary citizens, and maybe the unemployed. So what do you think is the number one priority of or priority of the public, particularly ordinary Southeast Asians in general at the moment? And the second sub-question is, for those who have extra savings, what are their worries and expectations? So may I ask Dr. Tan?
Sorry. Worry is that I think people may still think that there's a long way to go, but I'm a bit more optimistic. I think hopefully there will be tablets coming out soon. Hopefully people realize that with all the control put in place, people are safer than they realize. I think that really a very important attitude you need to adopt. So I think I'm an optimist. I'm an optimist. And I think there are plenty of when you sit at home, you think very hard, how to grow, and there are so many sectors you can grow, For example, 5G, I still remember, I used to have a phone that is like a brick, that can put only 20 names in the phone, Today I got 8,000 names in the phone and still have no problem, So I think, first of all, I think people must change, you need to be optimistic. There are many areas that the whole world are planning to come back again, renewable energy, you can do quite a lot of them, your solar, your solar and your hydroelectric power, your windmill, your 5G, your cyber security, your digitization, all this, I'm actually very optimistic, and there are so many things you can go. And I think electric car is also one of them, like battery, 5G, software, and all this, I don't know. Other panelists may be able to add.
But maybe what I can add for that question, Dr. Tan, is that for those not really big entrepreneurs or capitalists, I mean ordinary citizen who have extra savings, do you think do you think they have that nerve also to invest in say in small scale enterprises, maybe my MSMEs for that matter?
I think at the moment, the world is opening up with all this virtual, although people think physical is better than virtual, but at the same time, with the YouTube, with Facebook, with all kinds of, and people who are willing to share their knowledge, I think people on the street or the common people can also still learn. Now, if in terms of investment, you can't do it, then you need to spend time on looking for fund manager that suit your taste, and it's difficult for you to beat the pro. So you may want to spend time picking people that you think he can take care of your fund management.
Mm-hmm. Thank you, Dr. Tan. May I now invite Mr. Shazali first?
Okay, very quick. In Brunei, more than 50% of the Brunei citizens work for the Brunei government. So in a sense, because there's a high majority working for the Brunei government, it helps stability in terms of the domestic economy, the retail market, supermarket, and so on. But I think for those who do not work for the government, in view of what's happening with COVID, I think the most important thing for the general person in the public is job security and sustainable business. And the bottom line is they need to have some sort of employment. And I think it's important that the government support the MSMEs because they are the enterprises that create employment opportunities anyway. They account for more than 60% of the employment of locals in the market. So if you have spare cash, savings, obviously is going to be very small micro businesses where it's going to be low risk, food industry, catering, and things like that, cottage industries. So we're not looking at something big where you're looking at the export market. It's all going to be domestic, internal driven market. So that's where I see the potential growth in Brunei. And certainly that's where I think a lot of the entrepreneurs are looking anyway now to try and get some local domestic boost. And because of the pandemic, we relied a lot, more than 90% of our food is imported from within the region. But since the last 1.5 years, we've managed to move from totally dependent on import to more than 56% now of our food being grown locally. So that's promoted domestic entrepreneurs in terms of the agriculture, aquaculture, and a lot of the food-based industries in terms of the supply chain. So the important thing in the pandemic is when you rely on the logistics, you need to ensure that the supply chain is actually in Brunei rather than outside Brunei. So that has created opportunities for the development of some of these domestic entrepreneurs in domestic business. Thank you.
Yeah, Mr. Shazali, before that, I think there's a good question coming from Dominic Gomez. And here's the question. Looking into the future, how can the SMEs adapt to the disruptive effects of the health crisis and address the fluctuating shift in the market sector in the ASEAN region? It's in the chat box.
I know. I mean, my honest answer is going to be very difficult. It's going to be very difficult because, yes, the pandemic has increased the number of stress level, mental health issues, and also, from business failures, from lack of business, that has got a lot of other negative impacts on individuals. So, again, it falls on government to help, but, government do not have deep pockets. You cannot keep printing money just to try and support the economy because then it causes deflation, it causes your currency to weaken. It is a long process, but I believe that government needs to play a key role, especially in Brunei, in terms of helping with a lot of the mental issues and of the stress that has come out from coping with the COVID. Especially now we are in a curfew stage in Brunei. We see a lot of mental issues also coming up from this.
Yeah, thank you very much for that. And it's not only Brunei. I guess most
Yeah.
countries in Southeast Asia, including the Philippines, also need the support from the government. Let's proceed to Mr. Shan Saeed. Please go ahead.
Thank you. I think I will be more pragmatic in the situation. And if you see, the COVID has put 100 to 300 million people into poverty. 10 to 20 million people have lost their jobs globally. So what people need to do in these tempestuous times, number one thing, they need to upgrade the skill set all the time. Number two thing that we have learned from this COVID, that you need to have a contingency plan. You need to have a strategy. What if something goes wrong? What if plan A doesn't work? You have to go to plan B. What if plan B doesn't work? You have to go to plan C. This is an American style of, making a strategy. Since I'm US educated, I am always a big advocate of having a strategy in every company. So I think educating yourself, improving your skill set. In terms of investments, as I said, 51 years back, we were in the same situation. That is stagflation. What is stagflation? Where you have high inflation, low growth, and high unemployment. So what people did in 1970s, they invested in two asset classes. One was real estate and the other was commodities. And if you read history and economics, most of those sophisticated and smart investors, they have always taken position in these two asset classes. Look at gold. 1971, gold was trading at $35 per ounce. By 1980, on 20th January, gold was trading at $850 per ounce. It was a 2,300% increase. And if you look at real estate globally during that time, from 1970 to 1980, real estate grew by almost 100 to 200%. So we are coming back to the same era. History is repeating. As I said, we won't see any growth for the next 2 years. The next 2 years, we will have fractured growth. We will have a lot of financial fragilities, and we will have bazooka, because somebody mentioned, one of our valued speaker, that we have printed money. And I have seen history very closely from my naked eye. When Bear Stearns went down, 18th March, Tuesday, 2008, I was in Chicago. 15th September, Monday, 2008, Lehman Brothers went down, I was in Chicago. So I think we are heading to the same era, even maybe worse. So we might see a lot of fragilities. Equity markets are all-time high. They might take correction by 20 to 30%. Bond is the worst place to take position, because when you have high inflation, bond is not the best place to take position. So I think the only asset classes, the tangible asset classes that can give you wealth preservation and wealth protection is real estate, gold, silver.
Okay. Thank you for that, Mr. Shan. And I get that, the companies in Southeast Asia and even beyond that, the employees should needs upgrading their skills, maybe retraining and reskilling of the employees in order to adjust to the new normal. So with that, let's proceed to Mr. Firdaos.
Yeah, thank you, Prof. I think it is a foregone conclusion that once the economy is gradually reopened, it is the tendency to spend is much higher, because demand deposits is now at probably record highs now. In the case of Malaysia, we have not seen the demand deposits going up so high as how we have been experiencing over the last past year or so. As a result of that, any effect of economic reopening will lead to spending. So the question now should not be about what people will do, because you know for a fact that people will be spending, and they will be spending a lot. But the question we should be asking is that what would governments do? So this is the question, because if people were to spend at a point where companies are not able to recapture their supply, when supply cannot catch up as fast as demand does, then the tendency of prices to go up is much higher. So what would government do? Now you are stuck actually. Most governments is pretty much in a between a rock and a hard place rather, because at one hand you need growth. For like most countries around Southeast Asia, we have not seen a GDP contraction as deep as how we saw in second quarter of last year. So there is need for growth, but you can't. The fastest and the probably easiest way to source for growth is through private consumption. So would the government leave it for private consumption to lead the GDP growth in the coming quarters, or would it try to mitigate the impact of inflation by addressing some of the supply concerns, or perhaps increasing subsidies? Like in the case of Malaysia, the government have been subsidizing oil prices for some time now. Over the last 6-7 years ago, we tried a managed floating mechanism as far as oil price is concerned, through what we call an automatic pricing mechanism. So that worked well until oil prices went up to $60 per barrel. And as a result of that, the government intervened on oil prices and kept it at a certain level. So that certain level depends on the government of the day. Like right now, the retail oil prices is being kept at 2 ringgit and 5 cents. So when oil prices is being kept at a ceiling, then what would happen to other imports? What would happen to imported inflation, or rather food inflation in the case of Malaysia? Like we have seen how food prices has gone up quite a bit in Malaysia, despite intervention, and more so when over the last 1 year or so, supply has been disrupted, particularly in food production and seafood supplies. So we have seen seafood in the case of Malaysia has been rising at a much steeper rate compared to any other food inflation. So the question now is that we know how people will spend. We sort of know how the government would do in light of all this, but the question that you probably need to ask as well is that what would firms do? Would they maintain and say that, okay, this is how the economy right now, I'm not going to employ more workers now because I'm riding on high prices. So it's going to be a very tricky thing to do because if firms are able to ride on high prices at the same time, not having the kind of labor structure that they had like last year, then would they, would there be any incentive for them to, rehire in light of all this?
Thank you for that, Mr. Firdaus. We have only 20 minutes to go, but we are still in the appetizer part of the lunch of our lunch. No? So we'll proceed now to the main course. Let me ask, perhaps maybe we can start with, say, Mr. Firdaus on question on what are the new business and investment opportunities in ASEAN and where are the growth opportunities?
Okay, couple of things. Number one, I think without a doubt that the increase in digitalization over the last couple of years has given more prominence to, say, the semiconductor industry. Like if we see how Thailand's import of semicon products from Malaysia went as high as 5.1 trillion Thai baht in 2017, and even much higher during the pandemic. Like last year, it was somewhere around 6 trillion Thai baht. But overall, Thailand exported about close to 10 trillion worth of semicon products last year. Singapore is the same. As far as Singapore's IPI on semicon is concerned, they has been on an uptrend as well. In December 2015, the index recorded about 45.02 points, and it has been consistently trending upwards above the 100-point level since July last year. Malaysia is the same situation. Malaysia's semicon IPI has been trending above 100 point since March 2016. And there was only a short dip in 2 months last year in March and April. or maybe May and April. But for Malaysia, our semicon production has been trending upwards since 2015, as I said. And even with lockdowns, we've seen the demand for chips and semiconductor products is going to go up even higher. That's number one. Secondly is the EV components, electric vehicle components. Now, this is to capitalize on a large automotive market where 3.5 million passengers of commercial vehicles and about 4 million passengers of motorcycles and scooters sold before the pandemic. And then coupled with the pandemic, you see that there are a lot more sales of motorcycles, for example. So there is an infrastructure deficit to support EV in our region, and that will continue to be a challenge for ASEAN. And more so when 6 out of 10 of ASEAN member countries are oil producing states. So that would be more of a contrasting thing where we may end up being a supplier to the world rather than for our own region. Thirdly is now that we have semiconductor products, we have EV components, we have to think about the waste. So e-waste management is another sector that we have to think as well. So this is not entirely a new area where e-waste is under Basel Convention 1989, if I remember correctly, listed under Annex under List A of Annex 8. So waste coming from producers, consumers, handlers, etc., even the recyclers or recycling collectors, etc., would have to produce some kind of a waste. And this is more so when Southeast Asia is very much a production center of E&E, and this e-waste would account for things like EAE components, the mercury, switches, glass, etc., and the CRTs and whatnot. So that is the third bit, e-waste management. But there is another part where this is probably going to be moved alongside with production as well, which is the financing bit, or the alternative investments, innovative financial products away from the mainstream. Like, there have been talks about initial coin offering, and many of these are even approved by our Securities Commission here. So that's pretty much, I think, where the new business and investment opportunities in ASEAN are going to be look like in the coming years.
Thank you for that, Mr. Firdaus. From what you mentioned, we have now the acronym for that: SIF, Silicon Production, Electronic Vehicle, e-waste, and financial offerings. Thank you for that. Let's proceed to Mr. Shan Saeed.
Thank you. I foresee 3 investment opportunities. Number 1 is energy, number 2 is technology, and number 3 is infrastructure. As you know, for this year, oil prices are up by 61%, natural gas prices are up by 144%, year to date, 173% year on year. Mm-hmm. In Europe, gas prices are all-time high. Coal prices are all-time high. In UK, the energy providers have already informed customers that electricity prices would go up by 38% and gas prices will go up by 21%. So those economies who are producing oil, they tend to benefit. For next year, last week I shared Malaysia's GDP will be trading between 4 and 5% for 2022, based on the premise that higher commodity prices will tend to benefit Malaysia. Coming to technology-driven GDP growth will benefit many economies moving forward. 5G is in vogue. By 2025, there will be 1.2 billion 5G users. A third would be coming from China. AI, EV, 5G, these are the technology vogue that will stay for the next many years to come. I learned a lot about AI when I visited Stanford Graduate School of Business in 2016. At that time, the AI market was around $4 billion. By 2025, AI market share would be around $170 billion. So if you calculate the CAGR, it's almost 55%. So that is massive. So I believe that those economies that are moving ahead would be those in the next 3 to 5 years who would adopt technology. And Malaysia is in perfect position because more than 70% of the labor force is tech savvy, so they can leverage from the labor force. The third, infrastructure. I was fortunate enough to attend the annual meeting of IMF and World Bank in 2017, courtesy my professor at Chicago Booth. And the first topic was Belt and Road. And as you know, as of today, the Belt and Road total value of projects is around 4.5 trillion US dollar, and that is massive. And history has taught us that infrastructure investment has direct correlation with GDP growth. One of my Nobel laureate professors, Robert Fogel, wrote a paper in 1964, and he talked about the Japanese railroad system called Shinkansen, an American railroad system. So I think ASEAN requires $1.2, $1.3 trillion of infrastructure investment. Indonesia alone requires 400 billion. Myanmar requires 300 billion. Philippines and Vietnam require 150 billion dollars. Malaysia requires 25 to 30 billion dollars. Countries like Cambodia and Laos require 25 to 30 billion dollars. So I think this will continue for the next 5 to 10 years. Infrastructure will be a driving force for many economies. Last but not least, I am a big fan of Chinese yuan. I was talking about Chinese yuan on 7th January 2011. And people were making fun of me in New York. And the only person who believed in my insight was my Nobel laureate professor, late Gary Becker, who believed in my insight. So now you see everybody's talking about digital yuan. Most of the central banks in ASEAN, they are focusing on digital currency. By February 22, when Winter Olympics will start in Beijing, Central Bank of China, PBOC, is going to start the digital yuan. So digital yuan is the in thing. When I first started 10 years back, my topic was Chinese yuan currency for the emerging markets. So I think most of the emerging markets would revisit their reserve position, and they would allocate some of the reserves to Chinese yuan. And the way Chinese yuan is moving, I think I wouldn't be surprised that many countries will adopt Chinese yuan. So I think I foresee these investment opportunities, energy, infrastructure, yes, ICT, chip, EV, AI, and of course, currency market. Thank you.
Thank you. Thank you. Mr. Shazali, please go ahead.
Okay, I'll be very quick. I think a lot of the sectors I think has been mentioned by Mr. Firdaos and Shan. I had three actually listed here: e-commerce, fintech, and IT infrastructure. And I think it's been eloquently covered by the panelists. Obviously, with digitalization, a lot of businesses will need to look at upgrading their IT, their infrastructure, the way that they do business over the internet. Fintech, as Mr. Firdaos talked about, the new methods of financing as well. So fintech, and a lot of the central banks have actually approved quite a number of the new fintech legislation, looking at new methods of financing, whether Islamic or conventional financing. And in order for the digitalization to work and for the digital divide to be, lessened, I guess, in the sense of the digital poverty, IT infrastructure is pretty critical in all the economies. Certainly, that is something that needs to be upgraded. Brunei being a small country, we need to upgrade our IT infrastructure because we still have a lot of people that do not have access to internet. So they are unable to, do their schooling online, everything else online. And I'm sure that a lot of the other ASEAN economies do have a lot of people that have got no internet access. So the IT infrastructure to me is pretty, it's going to be the next big investment, I think, in the next few years in the region. Thank you.
Thank you, Mr. Shazali. Dr. Tan?
Okay, you can mention quite a number of them, but although I think our panel speaker has mentioned quite a lot of areas, but I must say I can add a bit even more. When you stay at home, you buy a lot of things through online, and sometimes online can be even cheaper. So e-commerce is still growing. E-learning is going to be there. I think people would prefer to also do some e-learning. Cloud is a big business. Automation, very big business. Digitalization, data center. Yeah. So cybersecurity, pharmaceutical, I think people will pay more attention on that. AI, all this renewable energy, very important. I think people will do more and more solar, people will do more and more wind, people will do more hydroelectric power. just to make sure that the environment is getting better, you know. So commodity price also you must not ignore, because I think with the pandemic shortage of production, you can see the price has gone up, even from basic, you know, rice, pineapple, all kinds of things, you know. But with the better price, sometimes it's also good for the economy. So I'm actually very optimistic. You know, there are so many areas that you can do. You see, ASEAN people, although, you know, nowadays you don't really need to go to very expensive university to learn something. You know, you need to just guide them. You know, so I see ASEAN has a dream, and ASEAN will continue to grow. There are so many areas you can go. You know, it's just that if the government, if the entrepreneur, with the intention to add value, I think our future is good.
Thank you, Dr. Tan, for that. That's good to be optimistic at the same time, no? Despite this pandemic. But we have only 8 minutes to go. But perhaps a very quick answer to the next question is, what will be the role of China and the US investors in the post-pandemic Southeast Asia? In other words, who is really exactly investing in Southeast Asia between the two?
One added point, sorry, I quickly say one. I know with the problem of China and US, I think you can see the Americans or the Chinese are looking at ASEAN. So ASEAN really, in that sense, has a very good prospect. You know, I'm actually quite optimistic, and also, you know, ASEAN has a very good young label. You know, sorry, I think I should stop here.
Okay, thank you, Dr. Tan. Now, may I ask Mr. Shazali?
Okay, you know, when two elephants fight, the grass gets trampled. And you know, when two big giants fight, everybody else gets trampled in between. But to me, I think the critical factor for me in this region is going to be China. China has played a critical role in terms of a lot of the infrastructural and development in Brunei. And maybe it's because of the South China Sea, you know, we look at the political side, but still, it is important investment in Brunei because they are investing quite a substantial amount in terms of oil refinery, the telecommunication, some of the apps for COVID, you know, in terms of contact tracing and so on and so forth. So I foresee China playing a critical role, not only China, but of course, the person that we always look up to is also Japan. Japan has played a critical role in terms of the development of a lot of the economies within this region. One of the big factors that I find about Japanese investment, in the past, they used to invest a lot, but do not transfer technology and knowledge. But now the Japanese have a different way of doing things. They do invest, but also make an effort to transfer technology and knowledge as well to the local countries that they have invested. So to me, I feel China is more important than the US within this region. Thank you.
Thank you. Mr. Shan?
Absolutely. China will be having a very close relationship with ASEAN. The country that has got 800 million people out of poverty from 1986 is simply remarkable. And the way President Xi Jinping is driving the economy forward. So I think China will be a driving force for ASEAN. And with China growing, many countries in ASEAN that are doing a lot of trade with China will tend to benefit. So I will say a country with $3.3 trillion of reserves who can make a lot of maneuvering, China will be the driving force in the next 5 to 10 years. Thank you.
Thank you. And then finally, Mr. Firdaos.
Okay, thank you. I very quickly, I think the question is not who is investing, but what is investing where. So you see, like, okay, let me just say this in the case of Malaysia. Like, as far as FDI manufacturing is concerned, manufacturing and services, about 62.5 billion of the seed investment was actually in the manufacturing sector, less so in the services. So who is actually investing in the manufacturing sector in Malaysia? Singapore, 16.7, South Korea, and the Netherlands. In the services, it was mostly distributive trade, and it's not really a big chunk of the investments. Where if you look at from the perspective of international investment position, from the balance of payment perspective, so as from the individual country's point of view, Singapore is the highest, second is Hong Kong, Japan, and then the Netherlands. But from the regional perspective, it has always been East Asia, Europe, and ASEAN. But if you look at it from the total net inflow into ASEAN, it's the China and US give a different perspective, two different perspectives altogether. So generally, from the Chinese side, Chinese investments into ASEAN, it has its ups and downs. It did go up as high as 11.2% in 2017, but it has been on a decreasing trend ever since. 17.5 billion US dollars worth of Chinese FDI came into ASEAN in 2017, the highest ever in the past 10 years. But that was it. And all in all, it was an increasing trend over the past decade, but that's all we can say. But in terms of the US, it has been on an increasing trend since 2010, from 14.2% to 25.3% in 2020. So whether we like it or not, whether it may seem like the Chinese are investing, but the Americans are investing even more from the ASEAN perspective.
Okay. Thank you for that, Mr. Firdaus. I'm afraid we don't have enough time, but from our discussion, it's really I really appreciate your honest opinion regarding this and your responses. I see that many companies were able to survive the pandemic due to the long-term alternative plans long before the advent of the COVID-19. And to some extent, you were able to adjust to the to the need of the pandemic, particularly even with the implementation of observance of the health protocols in your company. And most likely with remote working likely to continue for the foreseeable future. This is a timely wake-up call for companies in Southeast Asia to evaluate and perhaps enhance their technological infrastructure and increase their scrutiny of security and compliance policies. No? So before we close, I would like to express my thanks to Dr. Tan, to Mr. Shazali, Mr. Saeed, and Mr. Rosli for these enlightening interactions. To our participants, thanks for your participation and hope that you will join us in the third session this afternoon. So enjoy your lunch and thank you very much. And a round of applause to all. Thank you.
Thank you. Thank you. Thank you.
Thank you all.
Thank you.
Thank you all.
Stay safe and stay healthy, guys.
Thank you very much.